Okay, and welcome back, students who are taking financial accounting, and we are continuing in the series of videos working on the Chapter 3 exercises, the Group B, and we are working on, in this video, starting out with 3-38B, okay? And as I've said before, if you this is the application of the concepts. I mean, it's one thing to understand the concepts, and it's another thing to apply that understanding. So if you're not getting it, you may be having a little bit of a difficulty with your understanding of the theory and the concept. So, you can pause and rewind and watch this video again, but you might also have to go back and rewatch the theory videos and study the material in a textbook to be able to understand the concept so that you can apply it to the situation. And if you still don't get it, then feel free to contact an instructor. So, right, 3-38. Let me get my pen. It says here, use the following selected accounts. Prepare the entity's closing entries. And then number 2 is what is the ending retained earnings balance at April 30th, 2014. And so remember, when we're making closing entries, we close out our revenue accounts and our, I don't know why the pen did that, right? And we close out our expense accounts, which remember are both on your income statement, which gives you a profit or loss, and the other account that you close out are your dividends. All right, so those three types of accounts are what gets closed out to your retained earnings. So basically what we're doing is on the income statement here, we're taking this profit or loss and we're moving it into the retained earnings. And then any dividends we have to, we're going to pay out, we have to take that out of the retained earnings. So at the end of every accounting period, we're closing out those temporary accounts in order to have zero balances in the accounts. So let's start out with our revenue accounts, and we see we have a service revenue here. Remember, unearned revenues is a liability account because they're revenues, but they're unearned. We haven't earned them yet. We have an interest revenue account here. And okay, so that's our revenue account. So I'm going to go down to a blank screen here, a blank page. And so remember that these revenue accounts, the normal balance in the revenue accounts, they're credits, okay? I mean, the normal balance of an account is what increases that category of account. So if we had a zero balance in the revenue account and now we have 54,000 in service revenue, that means we increased it by 54, and we increase our revenues on the credit side, right? That's the normal balance. So if we're closing out those accounts, we have to do the opposite to it. So we would have to debit the service revenue for 54,000, and the other account is interest revenue for 500. So I would debit interest revenue for 500. Okay, and then of course when I make a journal entry, debits have to equal credits, and since we're closing them out and we're closing them out to retained earnings, our credit would be $54,500. Okay, so that's for our revenue accounts. Then we have to close out our expense accounts. Okay, and remember, our expense accounts, the normal balance of our expense accounts are debits, right? We increase expenses on the debit side. So when we're looking at these, we have a salaries expense, supplies expense, interest expense, retained earnings, salary pay, depreciation expense, and rent expense. Okay, so we have those 5 accounts, and they're all debits. So look in the book to see these numbers, I'm not going to bounce back and forth between these screens. But since they're already debits, that means we're going to have to credit those accounts. And if we credit those accounts, we're going to debit our retained earnings. Now notice I put this debit to retained earnings first. A lot of students would just automatically start out by writing, a credit to salary expense, which was for $20,800. They'd have a credit to rent expense, which was $5,900. They'd have a credit to depreciation expense for $2,600, and a credit to interest expense for $2,400. And notice that I'm abbreviating here. I mean, if you're actually making the journal entries, you would end up writing out the word salary, depreciation, interest, okay? But because I'm doing this for my own, homework, and I know that INT is interest and SUP is supplies, and I'm abbreviating expense because I'm doing homework. I'm not showing it to anybody. Right? But if I was actually doing it on a set of books, I'd actually write out those words. Okay, and what most students will do is they will start out, they'll go, okay, I know I have to credit these accounts, and since debits have to equal credits, I'll make a debit to retained earnings. And they kind of do things down the page like this, okay? Well, this is wrong, okay? A journal entry, the debits are always listed first, and then the credits, not the other way around, okay? So as you saw, I had to kind of like, okay, I know I'm going to credit these accounts, and I have to debit something else first. And what am I debiting? I'm debiting retained earnings. So my retained earnings goes first here, even though I don't know what that amount is at that moment in time. Now that I've listed all the credits, I can go and actually do the math here and figure out how much the total is for all of these amounts, which ends up being $33,500. So then I would put my $33,500 in here. Okay, and also notice I didn't write descriptions. Okay, the solutions would actually have the description amounts. Okay, now the last one that we have to do is because we have to close, remember, our dividends. Okay, and our dividends, if you recall, equity accounts have a normal balance of a credit. Okay, we increase our equity accounts on the credit side. However, dividends, that has a normal balance of a debit because it's a contra account to our equity accounts, meaning, if retained earnings has a balance in it, that's going to be a credit. But remember, dividends, we're taking that money out of the retained earnings, so that's why it's a contra account to it, and that's normal balance as a debit. All right. So we have the dividends has a debit of 16,000, and in order to close out that account, we have to make a credit, right? So I have a debit to retained earnings first, because that's what I'm closing it out to. And then I would credit my dividends for the 16,000. Okay, so that's my my 3 journal entries. Now, the other part of this problem says, what's the balance in the account at April 30th, 2014? Well, if you recall, when we're doing a statement of retained earnings, we have our beginning retained earnings, and then we're going to add our net income, our profit or loss, and then we're going to subtract our dividends, and that gives us our ending retained earnings. Okay. So our retained earnings here is $4,200. So if our beginning retained earnings are 4,200, okay, and then we have to add in our profit or loss. Well, what's our profit or loss? Okay, well, we had revenues here of 54,500. So I have, let me write it down here, 54,500. And then we had expenses of 33,500. Okay, so the difference between those two is $21,000. Okay, so we had a profit of $21,000. So that gives us a subtotal of 25,200, and then we have to take out 16,000 in dividends. So we subtract that, that's 2, so we end up with an ending retained earnings of $9,200. Okay, so that's it for problem 3-38. If you have any, well, let me see here. I'm at 11 minutes. Let me see what number 39 looks like. From the following accounts, prepare the business's statement of retained earnings. Okay, so let's go ahead and do this, and we'll do both in this same video. So we'll do 39 here also. It says, from the following accounts, prepare the business's statement of retained earnings for the year end. Okay, so remember, and I'm going to just kind of squeeze stuff down in here on the bottom of this here slide. Right, so we have our heading, and then we have our statement of retained earnings, and the date would be, for the year ending July 31, 2014. Okay, so that's what our heading should look like, right? It's for, we have to show the period, right? Now, whether you write for the in front of it, that's up to you, but you do have to show the period ending and the complete date, okay, as part of the heading, right? So I'm going to erase this because kind of like don't need that anymore, and I just need more space. So I have, in the body of this statement, I have my beginning retained earnings, and then I have to put the date, which was August 1st, 2013. Why is it August 1st, 2013? Because it's for the year, and the year ends July 31st. So the beginning date is August 1st for the next year. And since this year is ending 2014, well, the beginning was 2013. All right, so we have that beginning date. And we can see from our retained earnings account that that date has a balance of 84,000. Okay. And of course I have to put a dollar sign. Then I'm going to add my net income, or my net loss, whichever it is. So let's figure out what our net income is. Okay. In our retained earnings account, it's showing that we had a credit of 210,000, which is our revenues, right? And then we had a debit of 132,000, which are our expenses. So that means I have a balance of 78,000 for my net income. So I am going to add in my 78,000 for my net income, which now gives me a subtotal of 162,000. Okay, and then we're going to less whatever our dividends were. Now, you're looking at this dividend account and you can see that you made a closing entry of 46,000 for your dividends. Okay, so our dividends are 46,000. Oh, I'm sorry, I don't write the brackets there. Also, too, what you might want to also notice that if I wasn't looking at my dividends account, let's just say I was only looking at my retained earnings account here. I see a beginning balance, and I know that I'm going to have 3 entries, one for revenues, one for expenses, and one for dividends. Okay. If I only have 2 entries, that means I probably didn't have any dividend. Okay. But in this case here, I can see I have 3 closing entries, right? And revenues are credits, expenses are debits, and dividends are debits, right? So I know this closing entry of 210 is a credit, right? So that's my revenue. So then when I'm looking at my other 2 entries, they're on the debit side. And, yeah, I want to look at my dividends account to make sure that this closing entry of 46,000 is my dividend, okay? Generally, you're going to close out your expense first, so I know that this first line item is my 132,000 for expenses, and the second line item is my dividends, because I generally close dividends after I close expenses. But and I would, that's if I wasn't looking at my dividends account. Okay, let's say it was just completely covered up and I wasn't looking at it. That's how I would determine which entry here was for revenues and which one was for expenses. I'm sorry, which one was for expenses and which one was for dividends. Okay, is because why I make the entry for expenses first and the dividend second. Okay, right. So, but I would, if I have access to the dividends account, I want to double check it. Okay, and I can see that the closing entry was for 46,000. So now I have to subtract out the 46,000, and that gives me my ending retained earnings. And remember, you have to put in the date, July 31st, 2014. And so that balance is, when I subtract 146,000 from 162,000, I end up with 116,000. And that gets a double underline because it's the end of a calculation, and I put the dollar sign to show that it's dollars and not decimals. Okay. All right, so that's it for that problem. And if you have any questions, again, watch some of the other videos, do the homework problems, because really, if you did 38, you should know how to do 39. If you didn't know how to do 38, there was other problems, and from the chapter 2, which we created statements of retained earnings. So look at the homework problems and see how it's done. All right, see you in the next video for problem 40.